So if you're a senior technical leader trying to ship AI, you're probably carrying the decision load for risk, vendor claims, and is this safe enough? That's how you become the permanent auditor, and the team learns to wait for you. In this episode, we're going to map the mechanics of auditability so that you can move faster without becoming the bottleneck. Now, today, I'm joined by Daniel Nicki, founder of CoRes, who spent years pressure testing companies and AI claims through research and auditing. Now, this matters if you're a CTO or VP of engineering who needs to adopt AI responsibly without becoming the approval layer for every single thing. So welcome to the show, Daniel.
Well, thanks for having me, Mike. How are you doing today?
Yeah, appreciate having you here. So before AI auditing, you were operating in environments where capital risk was real and assumptions got punished. So what was breaking or getting exposed that taught you to distrust good stories and actually demand evidence instead?
Oh, that's a great question. I think it will have to go back when I finished university, because I finished university in 2009 and hence the financial crisis in 2008. And we just saw a big exposure due to a lack of research and I would say contingency plans. And it kind of showed it was tough to get a job during that time for those who remember, who got out of university or college. And it was kind of a big time of insecurity. But I think the thing that I always liked about what I do, hence investment research and auditing data, is that I always liked research. It's kind of a thing since I was a child. I liked watching sports, and I'll be interested about learning about a certain athlete. Where did they play? Where did they went to college? And I'll be like, oh, I would like to go to, let's say, Duke, Kentucky. I did not end up going there. I wasn't that good in sports that I thought I could be when I was like 8 years old, but it was always something intriguing. It's like a sense of curiosity. And I think it's also, make a decision, and it's kind of like, what can you minimize the risk? And I started working in student jobs in accounting and in tax analysis in Canada for Canadian Pacific Railway. And I kind of saw how important it is to make sure the numbers or the information is correct, especially in accounting. For those who know, who are entrepreneurs or in management or everyone who pays their taxes, you have to make sure, as they say, the old accounting term, debit equals credit. And I saw dealing with individuals who are getting audited, like how important to make sure the journal transactions are correct, that there's no misconceptions. And therefore, I kind of learned, hey, you have to make sure that you can trace the source or to back why this is this certain number or this is a final statement. And then I worked in management consulting after university when I moved to Croatia from Canada. And when I was in management consulting, I had to do a lot of research comparison, how to innovate companies to be more efficient. And you hear from clients, why this? Why should we do this? Well, you have to back it up. If you can back up what you're saying, then you're more confident and it's more convincing to the other person that you know what you're talking about. And then also working in real estate development, which is a totally different ball game. And you're dealing with shopping centers, office centers, and logistics. If I'm building a financial model, I have to back it up. What's the research? How's the market going? Why should we invest millions and millions of dollars in this project if the rents are not that high or the yields very high compared to being low, and if there's a huge vacancy? And I had to deal with a lot of primary research. And for those who are in the real estate market, it's not that easy that you can just call. You have to go to the properties, look around, look who the tenants are because the information is not updated, and etc. And dealing with presentations for management and shareholders of a company that was quite large, which was HP Reavis. This is companies that has assets under management in the billions, and this is in the early 2010s. You have to be very confident because they're drilling you. And a lot of the management team were ex-McKinsey, so they know you have to know your stuff. And I learned that when you can back the sources that you're using and why you came to a conclusion, it's easy to make a strategic decision and minimize the risk. Because once you put money into something, you have to make sure it's worth it. And a lot of times you might make the wrong decision, but a lot of times if you do your research properly and minimize the risk by making sure that you have the right sources, it'll end up being good.
So in the real estate and investment world, what were the first signals that a so-called safe decision was actually built on weak assumptions?
Oh, a safe decision based on weak assumptions. That's a good question. Can you be more specific what you mean by weak assumptions for safe decisions?
Well, like, instead of having concrete data, someone comes to you and they say, okay, I'm going to make this decision, and it's the safe decision to make. But they've assumed some things rather than actually done the research. And something must kind of signal that in order for you to kind of redirect. What were those signals that you would pick up on that maybe, hey, they didn't do their research?
Okay, no, that's a great question. I think it would also be, there's a large footprint in it, or this is like a location that has a lot of footprint. For those who know footprint, like a lot of people are walking by it, there's a lot of offices and stuff, and it's like, hey, we should build a shopping center nearby or another office building. But I know there's a huge vacancy rates in the other office buildings or nearby shopping mall. That I'm kind of like, okay, they're just going based on it. They're kind of like fear of missing out. They're just going with the flow, and they're just going with that decision to try to get this certain location due to the fact that they know there's a building permit available to build in there, and the price is quite lower than usual. And I understand sometimes the thought is, hey, we're going to make it better and bigger, better, and more quality. People are going to, or companies are going to be more willing to cancel their leases or switch to our building when it's developed. And so that's, in some cases, I think that's not the great way to go with it, because I've noticed when dealing with the process in real estate, there's a lot of hidden costs, and that's hence contingency. And you got to deal with bureaucracy, you got to deal with the public sector, and et cetera, et cetera. You got to deal with architects. Oh, we found something when started digging. Oh, it's something with cultural safety, and et cetera, and et cetera. So there's always hidden costs.
So when you were managing large projects, though, what did risk management look like day to day? Like, not as a concept, but as a system. What did it look like for you?
There's a process. I think whoever I dealt with, who was even in management or investing or startups, you have to have a process, how you come to a decision. So it's a step-by-step. Okay, we're interested in a certain, like, say, for instance, for real estate development, we're interested in a certain location, do the research on the area. Is there potential there? And then you go step by step. And at the end of the day, it comes down to the people that you work with. If you're dealing with the other side, do you think you can negotiate with them on a certain price? Are they overvaluing their property, or they're undervaluing it? Is there something that's not really good there in terms of the ownership? There's a big issues. There's lawsuits and et cetera. Are you going to deal with legal fees and et cetera, et cetera? So I would say you have to have a process, and kind of like I kind of go back to like university, the tree diagram. When you go, is this property good? Yes or no? Yes. Okay. Do they have is this market growing or declining? Yes or no? It kind of goes down like that.
So where did that system fail under, like, schedule pressure, for instance? Like, got to have this done by a certain time. Where did the failures come from?
I would say failures come down to communication, money. A lot of times, at the end of the day, if you don't have the monies, or that comes down to it. And I would also say, some would say misleading the other party. I would say plain out lying. I would say that. And I think we all know this, who's been an entrepreneur. If you haven't gotten screwed over, or someone hasn't misled you or lied to you, you are beyond lucky. Because I know plenty of people who've been, let's just say politely, misled.
Oh yeah, I mean, that's a common issue these days too. People promise things and they're not even capable of delivering them in the first place, and it's just all a lie. So what's the most common lie that smart decision makers tell themselves when they want to move fast without proof?
I think they like to show power. Don't take no as an answer, and always be like, yes, this can be solved. Yes, this can be solved, without even processing the problem or the situation at hand. And I've seen that a lot of times, like, yes, you'll get this investment at this time, and they don't have all the money to invest in a certain project. Or yes, we agree on this. And it's like, hold on, not all the shareholders agree. Or they're like, yes, we will agree on this. If you can get the building permit, we'll pay you at this time. And then they delay it. And I always say, try to get it all on paper. And even if you have it all on paper, you're still not 100% secure, but it minimizes the risk. And I know this isn't nice to say, but do not be shocked to be misled. You have to be open-minded to that, and that's business. And I think that's one thing that's not taught enough in universities. I did not know it until I got into the business world, how many people get misled, or other words, played. And that's why lawyers are so important. Why do you see all these high net worth individuals or family offices pay so much money to lawyers? Because they do the work to make sure that these guys minimize the risk so they can sleep at night to make these decisions.
So true. So what was the biggest shock when you moved from traditional assets into tech and AI-driven businesses?
I would say when I was working with traditional assets, I kind of thought a bit more of, look at the numbers. 1 + 1 = 2. And then when you look at tech, it's like, what's the future value? Because if you asked me 15 years ago, Tesla is going to be worth more than Volkswagen, or Amazon's going to be the biggest company, Google, I'll be like, I don't know about their cash flow, finance, but they're investing in the future. And I would say with tech, you're investing in the idea. What are they innovating in a certain market? And a lot of times I look at, if I'm going to invest in a company, say even in stocks, let's just say, for example, research and development. That is so important. And is the company going to still be growing or a big player in the market in 5 to 10 years?
So was there anything that you had to unlearn about confidence as a decision signal? You know, a lot of people, they feel like, okay, I have the confidence this is going to work. We can go make this decision. Was there anything you had to unlearn about that?
I think when investing in startups or tech companies, you have to focus on the management. The founder is very important if it's early stage, because you can't really look at revenues before it's like confident, oh, the cash flow or whatever, like there's going to be cash flow right away. If you're investing in tech, you have to be like, okay, what's the burn rate? So those who don't know what burn rate, how much money are they losing each month or during a period of time? And I had to unlearn the kind of like, just not focus on the math, the finance. It's a huge important factor, but you have to look at other things. Who are the owners? What's the ownership? In terms of, you have to look more into, I would also say, who are the competitors in the global market? Because you can have a company, say in Denver, a person can have a company in Montreal, another person can have a company in Jeddah, another person has a company in Baku, Azerbaijan. You're all competitors. You like it or not. It's the globalized world you're dealing with tech. And that's one thing I was like, wow. In real estate and hard assets, like, who's your neighbor or vicinity of 3 hours? Now it's like, there is no borders. That was a big like eye opener for me. And also you have to constantly look what's going on in the markets. Like, in my opinion, anyone in tech, you have to always be doing research. Even if you have to follow the news, what's going on in the global markets, and et cetera, because there's always a new company coming up. And I think with hard assets, it's very tough to compete with the big players. In tech, it's changing. You have more of a chance of competing with the big players or growing much quicker, as we see. And correct me if I'm not wrong, I think back in the day, like 30, 20 years ago, the average lifeline of a Fortune 500 company was like 2.5, 5 years. Now I think it's like 18 months. And it's crazy
Yeah.
what's going on, like how fast these companies are growing. And you have to look at emerging tech. Like we now hear AI is the big word. And I remember looking into AI when I was working with investors in 2017, 18. There wasn't too much of a buzz about that. It was more about blockchain and just data and SaaS. Now we're hearing about AI more and more. And what's next? Quantum, possibly. And it's like, wow. And that's, I think, in my opinion, it's AI is the biggest innovation since the internet, if not bigger.
Well, LLMs and those kind of things, I would agree with you on. I think AI in a lot of instances has been around. It was just known as machine learning. And I mean, I was a developer for 40 years, and I mean, we toyed with this kind of stuff back then, but I hear what you're saying. So like, it seems to me like you had a discipline for evidence, and then you entered markets where velocity and storytelling, they outrun diligence like that. So let's get to the decision point. When did you realize that your approach to all of that had to be a system and not just like your own personal rigor? You know, because like when I was a developer, I could just sit down and like push. But then when I became a CTO, it wasn't about me anymore. I had to have a system that my people followed. So when did you figure that out?
Since I was dealing with clients that are investors, when I know if I have to minimize the risk if I'm going to keep them keep them as a client. And I would go through a process. You kind of have like a scorecard. Okay, finance, it depends on the stage of company, management team, shareholders, legal due diligence. Like there's so many aspects they have to look into. The market, and a lot of times it would be what's the market size and growth. And sometimes I would work with investors. They're like, Daniel, it's a 1 billion plus market. Okay, we're interested. Even if they're an early stage investor or whatever, because they're like, we have to get a return on investment. We don't think they're going to be the next Facebook or, Meta or Qualcomm or whatever, or NVIDIA, but we know that we can get a return on investment. If it's 3x, so for 300% return or higher, we'll be satisfied and our shareholders will be satisfied, or limited partners. So I would always go through, it's kind of like a process. That's always been my way of working, step-by-step process. Sometimes if there was outliers, to be like, this company has everything we need, or we're going to go with a network partner that's already invested in a certain company. We're interested in investing in them. We trust their due diligence. We're going to go with them. I would always say, like, I think we should just double check, because it could be something that doesn't pertain to the investor's investment thesis, and or it just is too much of a risk due to the fact of the fund's AUM or how the rest of the portfolio companies are doing. And that's one thing I think that's very important to look in terms of investors. You have to look at the overall picture. Is it going to help their portfolio to satisfy the current limited partners and or to obtain future, I would say, stakeholders into the fund? Because it's a domino effect. It's kind of like you're a public company. You always have to make sure the quarterly earnings are good and you're growing.
So what gap made you start Corez? Like, what were clients getting wrong that wasn't being corrected by normal research?
I would say how they would get their sources, because I did a lot of primary research, and you can't just take secondary sources at face and be like, I'm just going to go with this source, it's right. You have to do compare. And I looked at, say, in the startup world, I looked at several different sources and there would be 3 different answers. Then I was like, which one do you pick? Well, you got to do the primary research. And it could be a certain method how to do it. You contact the startup company, you contact an investor, you're like, hey, I'm doing research on this. I'm doing a summary. Can you tell me about this? I'll share your summary of it. Because as you know, in business, it's all transactional relationships. And you have to give them something if you want value from them. And I would say another thing is I noticed that you can do the bot research, which is a lot of AI is doing, but what's the value? What's your experience and expertise from this research shows you? What trends do you see coming out? You have to always be thinking, being insightful. And I think that's very important when doing research. And you have to take into consideration what's in the best interest of your client. If you were in their position, how would you think? And that's one thing I think in research a lot of people fail to do. If you're dealing with startups, think like what the start, try to be like, what is the startup trying to get and what is the investor trying to get, and try to come to a conclusion which is the best method.
So what did you decide you would not do that most firms default to?
I was surprised how many funds or companies don't do their own research. They don't just take it at face value. They're like, oh, I got this source. It's perfect. It doesn't matter. I don't need to go into more detail. And I think we see a lot of times, I'll take, for instance, startups. I have a great product. There's not much research. I just Google, there's not many competitors. So I'm fine. And I remember there was one, I would say, investor show I was attending, and there was a company, they were dealing with healthcare. And they're like, yeah, we have no competitors. So I Googled it quickly. I found like 5 competitors in 2 minutes. I'm like, wow, this is not appealing to potential investors because you don't know your market. And for investors, they're like, oh, we're going to invest in this company because this is the market. There's not much competition. And we think we could get a return on investment because they're innovative. And it's like, hold on, you're just taking one source. You didn't look at several other sources, because you can't take what you see from one source. There's other sources that are using different methods of getting this research or data, and you have to make a conclusion. That's what I did for a client for 4.5 years. I would use at least 5 sources, give them updates on the AI market weekly, and I have to back up why I came to a conclusion. And I would do 20 hours of just this type of research, and I have to explain 2 minutes on a Monday call. And the one thing I would always get is like, yes, I get the ball work. What's the takeaway? What is the takeaway? And I've been told, you're wasting my time. You're a nice guy. You have a nice voice, but I'm not interested. I want to know the takeaway. And they were right, because they always say time is money.
So true. I mean, it's like, we were talking about, what you do that others, you just say you would not do that others default to. And like one of the things when I became a CTO, one of the things that I learned was to not be the guy looking over their shoulder and not be the one that they come to for everything, because it caused my work hours to skyrocket. And even down to, I did not get stressed out in front of, say, our call center staff. I even got chastised by our CEO once. We had a AT&T for our internet, and they were doing something out in the street, and they cut off our internet, and they told me, we'll have it back up. It'll take 2 hours or less. So, I had a backup internet connection. I flipped it on. It was a little slower than the AT&T one. And he comes in my office and he's like, you don't seem stressed out about this. And I said, well, I am on the inside, but which would you rather? Would you rather I show confidence to the team that's out there, or panic and make them panic? And you could see the light bulb go off in his head. So, it's interesting when they're not in your role, what people think you should be doing until you tell them why you're not. But so you've analyzed like more than 15,000 companies. What patterns separate real capability from just good positioning?
Oh, that's a good question. I think when looking at a lot of companies, that what I've noticed is it goes back to the company being able to pivot in terms of change and being able to be innovative and growing. When you look at the largest companies today, say the Magna 7, and you look, those are all companies that are able to pivot. Look at Amazon. Initially, it was an online bookstore, and it has so many products now. Or you look at Google, it was just a search engine. But no, they have Gmail. And I think one thing that I noticed with a lot of companies that have good positioning is that they understand that maybe they won't be able to compete with the big guys, but they can work with them. And maybe they'll have an exit by being acquired, or they'll go on an IPO, and et cetera. And I think the most important thing that startups have to look at is, what's your exit plan? Because if you want investment, every investor is going to be like, what is your exit plan? Yeah, you want to be or they're thinking, okay, maybe I'll wait for the company to grow big and get a secondary investor to buy my shares in, something like that. But good positioning in terms of overall, you have to understand you can't be content. And I've heard from a lot of successful business people and those who I worked with, you kind of have to be anxious in terms of your company, like where it's going to be in the future. And you have to be able to find solutions to big problems.
So when someone claims, we use AI, what's the fastest way to find out if it's real or just marketing?
Well, you have to look at the tech architecture. And sometimes they say they use AI, but it could be from a third-party source, which I have nothing against, to be honest. And because I think sometimes a company has to be realistic and be like, can we really develop a better product than what's already in market? If not, can we do work on this and let's just say upgrade what we need for the market? And I think that's a good business decision, because sometimes not everyone can be a telecommunications company, but they can use the telecommunication companies' products and services to get a certain product or idea out. And I think a lot of times you can look at the patents, what patents they're using, because if they have an innovative AI, they usually will get a patent. Why? For copyrights. And another way, and I will say this very openly, I've seen a lot of companies, zero revenue, but they have a great patent. And that's why certain investors invest in them. And they're like, Cisco's going to buy this patent of them. We'll get a return on investment. It's a nice, safe bet. It's like putting money in a treasury bond. I can sleep at night.
So when you're auditing AI models, what are the first red flags that predict downstream harm or potentially failure?
I would say, because AI models is based on the data or information it's used to train. And cybersecurity is important. And I'm not a cybersecurity expert, so I won't go too much into details in terms of cybersecurity. But in terms of data, which is my background, you have to look at the sources that they're using. And another thing is the data, and it goes back to research, that they're using is valid in terms of the sources and how it was obtained. And it has the AI model been trained properly? Because I worked with a startup that was building its own AI model. And this is pre-COVID, pre-ChatGPT. This is like in 2017, 18. It is a lot of work just to get the data information. And I know that because there was a lot of sleepless nights just to make sure a synonym is correct, or that it understands certain data point. Oh, if this point is this, what does this equal? And I think AI models are very good if the data and information is used for it is proper and is trained properly. And you look at it, autonomous vehicles, they need 15 million data points to recognize just what is a tree. 15 million. And just imagine all the work that goes into making sure that AI model recognizes it. And we see it with a lot of these large, I would say, companies like ChatGPT, they use Reddit. You see XAI, they have X information, or former Twitter. Like every company is using their data and trying to collect, and they have to organize that data.
That's interesting. So, I mean, we've talked about a few things here. Now I kind of want to kind of like translate this into leadership leverage. So like, what can a CTO implement so AI decisions don't route through them personally? So if a CTO wants auditability without slowing down delivery to a crawl, what's the minimal operating system they should put in place?
I would say it kind of goes back to research. They have to have their own funnel just to make sure, like, to deliver the AI model to be trained properly. And they have to make sure that cybersecurity is on par. And you have to keep on making sure that the results of the AI model is correct. And you have to have several use cases. And you have to minimize the risk of releasing a product, because if you release it, you do all this marketing, it's not done properly, the market won't forget it.
So what has to be defined explicitly? Decision rights, evaluation standards, or maybe escalation thresholds?
I would say the decision rights have to be validated. And I think a lot of times with AI, because it's based on the human that's developing it, you have to minimize the bias. And I believe we've seen it quite a lot. And you have to be careful with the copyright. The information that it's showing, is it legal to provide such information? We see a lot of issues with copyrights, and we're in a world today, hence why lawyers get paid so much. You better make sure that you have the rights to promote or to release certain information.
So what do you think is the smallest team structure that can own all of that without creating a new bureaucracy?
What do you mean by that, if you don't mind me asking?
Well, what usually happens is when you're managing something like this, you talked about the minimal operating system, put it in place, but a team has to run that. And so, do you need 50 people? Can you get away with 5? Because the bigger the team, the more the bureaucracy, because then it becomes, oh, that's not my job. That's they do this thing. It's the other person's job. So what do you think is the smallest team structure that you can get away with and still own all of that and all the decision rights and all that you mentioned?
I think it depends on what type of product you're building. To be very open, if you're building a simple AI model to solve a easy to use problem, you probably don't need too many decision makers. But I think you could look at these big companies. They got thousands of individuals that are making sure that this certain AI model is getting it right, from lawyers to data scientists to tech engineers to, it could be marketing, etc., PR, because there's always these certain issues. So I think it just depends on what you're trying to build. But I think in today's world, we're going to see less and less bigger companies. Like, we're probably going to see 3 to 5 people companies being valued at $10 million, just due to the fact of the emergence of AI to replace a lot of the bot work that humans did. And because I believe a lot of these tech companies who are building their AI models, they're using other AI models to help them develop these products in certain ways. It could be from research, it could be from assistance, it could be just from basic scraping.
So before we continue, just want to tell the listeners that if you have nagging leadership questions that you want to get answered, there's a QR code on the screen. You click on that thing, and it will take you to a form where you can fill that out, and potentially those will get answered in another episode. So back to what we're talking about here. How do you reconcile the speed of AI shipping with the slower pace of due diligence without outsourcing judgment entirely to the CTO?
I think it goes back to having a process. Like, leadership has to make the final call because they're going to be responsible. They're going to be the ones that are going to deal with the legal issues and they're going to be there. I would say this in relation to leadership, being myself an entrepreneur and having employees and stuff like that, you are responsible for the success of the company. A CTO, if they're not co-founder or not the CEO, they are to assist you. So at the end of the day, as CTO, I look at it kind of like they're the advisor to the CEO to guide the company, or I would say to build the ship to lead the company to success. And I think you have to take into consideration a CTO can't be a jack of all trades in a way. It can't be, I have to know about legal, That's why you have a legal team, or get a consulting or a other legal partner to help out in that. The CTO is focused on the tech and making sure it operates and functions properly. And then they have someone to give them advice on the other aspects of the AI model to be efficient to be released in the market. I think it's not fair that a CTO takes all the accountability for AI model when AI model is just the product, is not the full company. That's how I look at it, unless you're trying to sell a widget, which still has value. There's companies that have a widget and they've been able to be extremely successful.
Yeah, it's like I do NetSuite development with one of my companies, and for some reason, companies always put the finance team in charge of the implementation. And so what happens is you get basically a glorified QuickBooks if you're not careful. And I find that interesting because if you put it into one person's, say, world, they're going to shape it to fit their world. And I think one of the things that a good CTO needs to always remember is not only does he need to let his team do his job, but he needs to reach out to other people on the management team, on other executives, to find out how is this going to impact your department? Because when they forget to do that, things become a complete mess. So what does a responsible AI adoption program look like when it's real and not just a slide deck?
I would say, in terms of adopting AI into a company, you have to, let's just say if a company wants to use AI, they have to find a reason why to use it. It's going to make it more better for the company to use. If you're just saying you're using AI to sound like you're going with the trends or to sound innovative, but you don't really know how to use it, you're wasting money and time. And I think AI adoption has to be implemented that the client understands why it's being used and how it can help them to be more efficient. And I think it goes back to doing business in general. You have to find what the want and the need of a potential customer is and have a product or service that can solve or help them obtain what they want to get or what they need to solve. That's how I look at it. Kind of based, to me, it's like mathematics in a way.
So if there's a leader out there and they're evaluating AI vendors or internal builds, how do you prevent the organization from buying confidence instead of capability?
That's a great question. I think you kind of have to do your research. Going back to what we've been talking a lot, if you're dealing with a company, or I would say do a pilot project. I think sometimes that can help too. To be like, oh, let's do like a small pilot project, because it could be a startup and they can be a lot better, or a small team or a young team company that can really help this company have AI adoption to their services and products, and they could be a lot cheaper than going with another company. So one way would be to do a pilot project or see use cases, do the reference research, check from testimonials, contact the clients that they advertise, or if it's a really big investment to adopt this company's AI into your services and products, hire an expert who can do the due diligence to see if it's worth going with this company.
So what kind of proof should be mandatory before a pilot becomes production?
I think if the AI company has to show what they did. To be like, hey, we got this, your company is dealing with, let's just say, patient care, healthcare. You have a doctor's office and we want to use voice tech that deals with patient care, that when your employees customers call, that you have a voice tech product that solves all their issues and it can direct them to who they need to talk to or to book a service. And you do tests. And then you also see like, okay, we see that this is working. Let's try it. And you put like sometimes a trial period. That's one way to do it after doing a test pilot project and be like, oh, the results are good. And then they have to be like, hey, you could save so much money with using us instead of hiring a secretary or assistant that does this work. And they can focus on other aspects, or you can allow the current secretary or assistant to kind of pivot their position to assist you in doing with other stuff so you can focus and have more time, more leisure time with your families or loved ones or friends, etc. I think one thing that I learned a lot dealing with AI, a lot of times it's like, what problem are you solving? Are you saving me time? And is the user experience good? If the user experience is so good and the result is better than what they're dealing with, they're most likely going to go with it. And if it comes down to money, time, and experience, in my opinion, when dealing with AI.
So what's a constraint that you'd enforce, even if it makes the sales cycle uncomfortable?
On the perspective of someone buying AI or someone selling AI?
Yes, buying.
Buy. I would say if they're going to buy from someone an AI product or service, I would be like, you know what? Let's do a pilot project so I can feel confident, or do the research. If they're a big company, they're like, we want to do a pilot project. This is how we go, da-da-da. And they're like, well, I want to know who your clients have been. Do your research, because it kind of goes back to investing. And every day, once you give someone your money, it's very hard to get it back or get a return. So you have to be sure about it. And if they're like, oh, we're going to adopt this AI, we're going to fire several employees, which is happening. And then later you're like, wow, we should have done that. Our clients are not happy. We're going to have big issues. We're going to lose customers. Financially, it's going to impact us greatly. So I think sometimes it's good to do a pilot. And I hear from a lot of startups and companies that sell AI products, they always have to be like, hey, you can have a trial period and something like this. And you have to look at what's their customer support, because you're going to have issues most likely. So what if I don't understand? And how are they going to train you so you understand? Because there could be some issues. And we saw this when dealing with, how many times have people done with cloud, or let's just say emails? How many times back in the early 2000s and late 90s dealing with emails where there's sometimes issues and etc. And I would think one thing that's very important that I think people who are adopting AI have to take into consideration is cybersecurity. And at the end of the day, is it really going to make your company more efficient? If it's not, why waste your money? That's my opinion. If it's not really cost beneficial to you, if it's not saving you time, why adopt to AI right now if you don't know why you're going to use it? It's just someone saying, oh, I'm going to hire a few employees because I have more free cash flow, but you don't know what you're going to use them for.
So far we've talked about how the evidence gets built. You know, you've mentioned research quite a lot, which is great, and how the hype gets detected, and then how leaders can avoid becoming the permanent auditor. So I want to slow down a little bit and ask for a principle that holds even as the technology changes. So what is the single principle that you think a CTO should refuse to violate when making high stakes decisions under uncertainty, especially when everyone is pressuring them to move faster?
That's a great question. I think a CTO, if they don't feel like the product's ready and valid to be pushed to the public, they shouldn't do it, because they're going to get blamed right away, because that's their responsibility. And they're the expert in that field. Because I think a lot of times we've seen throughout business history, how many times did someone, let's just say, is a chief financial officer or an accounting or something, and then they get blamed because of accounting, let's just say fraud, or they put a certain number because a CEO told them, oh, it's actually like this, but the check's going to come next week, or the invoice is going to be paid next week. And long and behold, they're dealing with legal issues. And I think a CTO who is responsible for the tech being prepared, being ready, and that it's valid and it's usable, has to make sure it's usable, that it's not going to default or have issues right away when it's released.
So basically,
and I think that's
they should trust their gut and not be forced, because I believe, like, if I was a CEO and my CTO came to me and said, and I said to my CTO, hey, this was a miserable failure. And he says, oh, well, you rushed me. I'm going to say, but you're the expert and you shouldn't have allowed me to rush you. I mean, does that make sense?
Yes. And I think it goes back to principles and accountability. At the end of the day, when there's a problem or there's a failure, there's going to be people who are going to have to take accountability. And I think it's very difficult for companies that are in the public stock markets because they have to always keep on growing because they got shareholders and they have to get those quarterly earnings. And for startups, it's also difficult too because they're on a, depending on their financial situation, but if they don't have a lot of bandwidth in terms of finance, it's tough. And I think it's better to be safe than sorry. Because if you're a CTO and you say, hey, let's release, the products can be released, and you're not confident about it, you're going to be the first to blame. Because there's going to be someone who's going to be accountable. The CEO is going to be like, well, you're the CTO, you're an expert in this field, you're responsible for this certain AI model to be done and ready to use. It's not done properly. Just like the finance person is going to be responsible to tell the CTO, yes, we can spend this much money on engineers, or we can use this third-party product. Like, that's why it's important to know who's responsible for what, and communication is huge. We hear it all the time, but sometimes communication is not done properly, and it goes back to lack of responsiveness, and it goes back to respect too. Sometimes people are like, oh, it's not my problem, why should I care? And that's not right, in my opinion.
Yeah, agreed. So before we land the plane, why don't you let the viewers know where they can connect with you if they'd like to reach out?
They can check out my website at danielnicki.com or check me out on LinkedIn at, it's a pretty unique last name, Daniel Nicki. And I'm quite responsive. And if they go on my website, they can see the companies I work with and a background, and which leads to my company's website, Chorus and Frontier Cover.
Awesome, awesome. Well, thank you, Daniel, so much for being here today. I really appreciated your time.
Thank you, and have a great day.
The core lesson here, though, is that, auditability, it's not a personal virtue. It's a leadership system, and it prevents the CTO from becoming the bottleneck in lots of different ways. So if you're a senior technical leader and everything still seems to come back to you, decisions, delivery, escalation, we build a quick diagnostic called the Firefighter CTO quiz, and it'll show you exactly where dependency is forming in your team and what to fix first. You can find that at the link in the description. And this has been another episode of Gaining the Technology Leadership Edge. We will see you again live next Friday at 10 a.m. Pacific. Nice job.